Kristin, I want to get your take first and foremost. When we can take what we want with a pinch of salt to a certain degree of where next for prices, but as we see this unarguable crypto winter upon us, is it now the time to be doubling down on policy making, ensuring that perhaps the protection's there as and when maybe we get a more intense bout of interest in the space again?
No, I think you're absolutely right. There's a big focus right now in Washington on trying to figure out the right regulatory framework for cryptocurrencies. It's important to remember that there are a lot of policies in place today. The on-ramps and off-ramps are regulated for anti-money laundering purposes. There's sanctions requirements. There's securities laws that apply in certain instances. But what we really need is a fresh look at the regulatory space. We need to figure out a framework for stablecoins. We need to figure out a framework for regulating the spot markets. And I think the events that have happened in the market in the past few weeks and months have really focused policymaker attention on trying to figure out a path forward.
A path forward, and especially as you look at who has claim to the assets at the end of the day in the event of bankruptcies or other forms of unwinding. How do regulators start to make sure that it is indeed the consumers that are protected instead of the investors in these companies? And what types of tensions does that create moving forward?
Well, listen, I think this is the first time we've seen a couple of the larger companies in this space go bankrupt, where there's actually questions about customer assets. So I think that there are some places in bankruptcy law that we need to look at this. I think more importantly, though, we need to have a regulatory home for these types of these types of entities that are doing consumer lending. We have not seen in the past very many crypto native organizations be able to get bank charters. I think we need to have a discussion about how can we open it up so that when you're dealing with customer deposits, that there is some sort of regulatory framework in place.
You know, you're really tied in with both the regulators, the lawmakers, and the companies themselves. Realistically, we've been waiting years, and there's been very little movement on that front. So realistically, how soon can you see it now that you're seeing customers, retail investors lose hundreds of millions of dollars?
Well, I think if you look at kind of the overall timeline, the key moment for getting this done is going to be 2023. I think that most regulators have done everything they can within the authority that they already have to provide guidance in this space. Not all of them, but most of them. But what the sort of consensus is we really need a new framework, one that Congress has to put into law via legislation. And we've been very excited to see proposals like the Lummis-Gillibrand proposal and others that are trying to look at these questions in a thoughtful and comprehensive way. I think the political reality is we're not going to see very much traction this year because the election is coming up. There's only a few legislative weeks left, and something of this magnitude just simply isn't going to move. But what we're doing at the Blockchain Association is with our members are meeting every single week to go deep on a different topic and finally sort of coalesce around what we think we can live with as an industry, and so that we can come to the table with solutions. So I think there's a lot of work, a lot of discussion, definitely a lot of legal bills, I can tell you that much. And we're really working hard to try to bring actionable solutions to the table. And I think 2023 is going to be the year that this all comes together.
What about other jurisdictions? Is Europe leading the way in some way? Are there other regional driving forces that are leading the pack versus the US?
Yeah, no, Europe made quite a bit of, I guess you could call it progress. Last month, they passed a sort of a more comprehensive look that impacts legislation that looks at both stablecoins as well as spot markets and things of that nature. I don't think the way that they've landed on their policies are ideal, but they have moved forward. And I think that's another factor that will put more pressure on the U.S. Congress in order for them to move forward with a more comprehensive legislative solution.
How hard is it for regulators to really either make customers whole or keep track of client funds when so many companies are deciding to domicile elsewhere? Dubai is becoming a huge hub for crypto firms, Hong Kong, the Bahamas even. So how then do customers in the U.S. stay protected?
Well, customers in the US should be operating with US based entities that are licensed to operate here in the US. There is technology where you can get around any sort of geofencing that's put into place. And we've seen quite a bit of this actually in the derivatives market because there is demand in the US for more access to derivatives. And the only way to get around that is to use a VPN and go to some overseas exchange. So I think actually having better, clearer rules of the road here in the US will keep consumers protected here, and make sure that the companies here in the U.S. that are offering these services have the ability to meet the demand that their customers, the services that they want, and do that in a way that's much safer.
Kristin, have you been discussing with companies sort of their moral obligations going forward as well? They might not be legal obligations, but many will say, look, this push towards saying it was democratization, this fervor around this FOMO feeling around advertising, particularly at the peak when we're all looking at, adverts that happen to be around the Super Bowl. Have there been lessons learned there? And is there an element of self-regulation going forward that they don't get themselves into this sort of situation again, where, yes, you can read the small print, but really they should have been more transparent that there isn't FDIC protection and the like?
Yeah, no, it's interesting. It's the DeFi protocols itself, the true decentralized finance, that didn't break. And even with vast changes in prices and a tremendous amount of market activity going on, the DeFi protocols themselves, they continued to operate, right? That's just software. Where we run into trouble is situations where we have centralized entities that are taking possession of other funds, and also where we've had lending that's gone on in a way that's levered, multiple times over. That's really been where the problems have been. And so I think that what we have to do is look at how do we put regulation on those centralized entities, and what are their obligations. But the underlying technology, these software-driven DeFi platforms, those continue to work just fine. And in fact, even under a tremendous amount of stress, they all continue to perform. One other thing I would point out, though, is that the industry itself is swooping in to make sure that customers are harmed as little as possible. We've seen Sam Bankman-Fried at FTX, who's come in and been a backstop to many of these companies. I mean, I've been joking, we don't need Uncle Sam because we have Uncle Sam Bankman-Fried. That is obviously not sustainable, but it's very much, sort of like JP Morgan back, in 1907, saying, hey, we see the bigger picture and we want to get through this turbulent time so we can get on building all of the services that we think are going to improve so many lives.